Hello, I'm Ronald Meredith with the Financial Center, and I want to welcome you to today's Insurance in a Minute. Today's topic is continuing on the life insurance genre, and we're going to be discussing whole life insurance. There's different types of whole life. Like anything in the insurance industry, there's a product to fit everybody. So today's topic, we're going to be talking again about whole life insurance, and we have traditional whole life insurance as we know it, that's been around since the existence of time. We have universal life, which is a hybrid of whole life. And then from universal life, we have variable universal life. This is a mixture of mutual fund subaccounts that affects the cash value. And then we have the new kid on the block is index universal life insurance. And today, what I'm going to be talking about is what when are each one of these different universal life products appropriate? Not so much the inner workings, but when is it appropriate? So with whole life insurance, this one is appropriate. Say, for example, you have a child, you want to put a whole life insurance policy on at an early age. And so from there, you contact an insurance agent. Premiums are real low. You can do whole life with a adult, use it in buy-sell agreements to create golden parachutes or golden handcuffs, as I like to call it. But in the make of all of this, cost per hundred whole life insurance is what's considered the most expensive. You have universal life insurance. Now, all of these uh, types of life insurance create cash value. Now, that's one of the main things I want to focus on. Cash value does accumulate in each one of these policies that will allow you to have a built-in savings. Your premiums remain the same for the entire whole life. Nowadays, whole life age limit max is 121. So if I get somebody to live to 122, let me know because I want to meet them. But for the most part, all of these policies do build up cash value. You have universal life insurance, again, a hybrid between a whole life. This policy, you can use this for husband and wife. Take out policies where the premiums are going to remain the same. They're assure that if you start out with a premium of $100 today at 35 or 40, at 65 or 70, the policy's premiums will always remain $100. Now, the next kid on the block is the variable universal life insurance. Again, it's a life insurance policy that will allow you to invest in mutual fund subaccounts. It's just like the Fidelities, the T. Rowe Prices, and Oppenheimers. All of these different mutual fund subaccounts are in the variable universal life insurance policy. These policies, you have death benefits, you have flexible premiums, you have the advantage of investing in mutual funds. But the part that you have to be careful about, since you're invested in mutual fund subaccounts, you do have the risk that if the mutual fund goes up, which everybody like for it to do, you're great. But what happens if the mutual fund, loses value? That's why when you're considering a variable universal life, you have to trust and develop a relationship with the agent that's selling you this product, because it's just like having a investment. So you have to be careful with this one here. But again, great product, great cash value to accumulate and accelerate cash value over universal life cash value, which is pretty much fixed. The whole life cash value percentage is fixed as well. This is determined by the insurance company. New kid on the block that everybody, it seems to be talking about on the internet and everywhere, is the index universal life. The index universal life is a hybrid between traditional universal life and variable universal life. The index have mutual fund indexes. It's not or a traditional mutual fund sub account, but it's an index like the Standard and Poor, Nasdaq, and the Russell 500 fund. So each one of these products have a role in your financial life. First and foremost, you want to make certain that if you choose one of these particular products, it meets your budget. You understand how it works, and remember that it is still aside from all of the cash value type accumulations, it's still a life insurance policy, and it has to act as a life insurance policy. So, not going to take up much more of your time. Contact us here at the Financial Center. We can be reached by the World Wide Web at www.thefinancialcentertn.com. We can be reached by telephone at 901-334-1280. And again, like before, by whatever medium you're viewing this on, if you do like or share, and we'll be glad to reach out and talk to you. Again, Ronald Meredith at the Financial Center. And I know we went a little long, but this is today's Insurance in a Minute.